Hi everyone, this is Chapter 1, Introducing Financial Statements. Today we're looking at an alternate version of Problem 17a. This is Part 3 of the problem. We covered Part 1 and 2 in an earlier video. So just to recap, it says Gabby Graham started the Graham Company, a new business beginning operations on May the 1st. The Graham Company completed the following transactions, and in Part 1 and 2, we analyzed all of the transactions and put them in this nice little table per Exhibit 1.9 from the textbook that we learned also in the Learn Smart module. Now we're moving into Part 3, prepare the income statement for May, a statement of retained earnings for May, a May 31st balance sheet. Some classes also might want to use this last one, a statement of cash flow, so this is an optional financial statement to also look at right now. It'll be covered more detail in Chapter 12 of the textbook. So Part 3, preparing the income statement. We're starting with the income statement, and I just kind of summarized the last accounts from that earlier table. We have all of the accounts that are involved, but not all these accounts are necessarily needed to put together the income statement. If we look back, we can see that the revenues and expenses are summarized here. We need the revenues. We'll have to go in and find out what each of the individual expense accounts were and summarize those. That'll include salaries expense, supplies expense, utility expense, telephone expense, etc. So let's go ahead and take the data that we have for revenues and enter what revenues were for the period. We can get rid of all the other information we don't need and just really focus in on revenues and expenses and enter in what consulting revenues were for $11,900. Let's go ahead and list what expenses were. We saw earlier that included in our total expenses were rent expenses of $2,300. Included in this earlier number, salaries expense of $1,460. Remember, we had salaries that were paid twice, and this the total of those two salary periods are totaled together in this one item called salaries expense. We had cleaning expense of $800, telephone expense of $300, utility expense of $260, and advertising expense was $90. We simply total all those up and we have total expenses of $5,210. We complete our income statement by taking the revenues minus the expenses to come up with what net income would be. So $11,900 minus $5,210 equals net income of $6,690. Now that net income of $6,690, that'll move over into the next statement we do, the statement of retained earnings. Let's take a look at that next. For the statement of retained earnings, we're going to begin with beginning retained earnings. The company just started in the month of May, so on that very first second of the month of May, did the company have any earnings that it had retained? Did it have any money that it had made up to that period? Well, no, beginning retained earnings were zero. So beginning retained earnings were zero. We move next from the income statement, the total net income, that was from the previous slide. So we add net income. That was the $11,900 in revenues minus the $5,210 in expenses. Remember, net income was $6,690. And that gives us a subtotal on our statement of retained earnings of $6,690. We next subtract out dividends. We had dividends of $1,800. So once we subtract out dividends out of $6,690, that leaves us ending retained earnings. So $6,690 minus $1,800 equals ending retained earnings of $4,890. So just to recap the statement of retained earnings, it starts with beginning retained earnings. We add to it net income. We would subtract out net loss if expenses exceeded revenues. We would subtract out dividends, and what's left over would be the ending retained earnings for the period. Now that retained earnings number, that moves forward into the balance sheet. Remember, under stockholders' equity, there are two components, contributed capital and retained earnings. Contributed capital comes from the stock purchases that stockholders made. Retained earnings comes from this document here, the statement of retained earnings. Let's take a look at the balance sheet next. It says prepare the income statement, statement of retained earnings from the balance sheet. So we've got the basic balance sheet already here. We've got all of our accounts. Let's remove things we don't need. So dividends, revenues, and expenses we'll look at as a sum number as part of the number for the statement of retained earnings. Notice that's that same number that we moved over from the statement of retained earnings. So 4890 is what we're going to be looking at, How do we get that 4890? Well, it's basically just revenues minus expenses minus dividends. We'll come back to that in just a second. So for now, our balance sheet is structured with assets on the left-hand side, and that equals liabilities plus stockholders' equity. So assets, those are all of our probable future economic resources, and at all times, those should equal the total claims on those resources. And remember, there's two types of claims: creditor claims, known as creditor liabilities or just strictly liabilities, and stockholder claims, known as stockholders' equities or just simply stockholders' equity. So for the assets, we'll go to our trial balance, or our document, and look at the accounts and the corresponding numbers. And we're only going to list on the balance sheet any account where there is an ending number for the period. So cash has an ending number of 47,120. Account receivable is 0, so we can leave that off. And office equipment was 1860. Total those together, and we have total assets 47,120 plus 1860. Total assets are 48,980. Under liabilities, we just have one, and that's the accounts payable with a $90 balance. Common stock was one of our two components of stockholders' equity. Remember, I said there's common stock, and there's also retained earnings that make up total equity. Well, let's list the common stock first, of 44,000. And now let's list retained earnings. Remember, we got that from the previous slide that showed the statement of retained earnings. That ending number is simply moved over here onto the balance sheet as one of the two components of stockholders' equity. Another way we get that is just simply taking all of the revenues the company had, minus all of the expenses, minus dividends, and adding that number to any beginning retained earnings. That's exactly what the statement of retained earnings did for us. So, from the statement of retained earnings, 6690 minus 1800, 4890 is the amount of our ending retained earnings for the month of May. Total things up, our accounts payable is our only liability, plus our common stock of retained earnings, 900 plus 44,000 plus 1860 gives us total claims on our assets that equal our assets of 48,980.